Welcome back to the How's the Market podcast. You know, our goal with How's the Market is every week to bring you into the conversations that we're having with thought leaders, with, certainly our research team, and really answer the questions that are most pressing in the market. And that's what I'm going to do today. This is going to be a solo episode. We're going to take the questions that have come in. I've got them right here in front of me. Everything from, why do we always say there's not going to be a housing crash to, what is the second half of this year going to hold? I'm going to sort of cover a lot of these. I think we have 6 or 7 questions here that have been sent in or have come through social media or some other form that we are going to address. And as always, I am going to take the approach of dealing in facts and then having a fact-based opinion. So I'll use the facts, I'll give you my opinion on the answers to these questions. And as always, maybe not always, but what we do a lot of times on the How's the Market podcast, if I use a report or a slide or something like that, we're going to link to it in the show notes. So you have that, you can use that if you get a question like this, okay? So with that as a backdrop, let's go ahead and hop in. We'll spend the next few minutes answering these questions and giving you the perspective on that. So I'll read the first one and we'll get started. So first one, why do you guys, it has KCM in parentheses, continue to promote no housing crash coming? You don't even say it's possible. Don't you think realtors have a responsibility to speak the truth about market volatility? Then they say mortgage defaults are up. What happens when they turn to foreclosures and those defaults increase? All right, that is certainly a question that I want to answer. I want to talk specifically to what they've said. Defaults being up, we'll talk about defaults. I've got some information here that our team has pulled on defaults, and again, I will give that to you in the show notes. But let me kind of back up and say this. We've talked about over the last several years at KCM how we don't see a crash coming in the current market. But they say, don't you even think it or say it's possible? Well, let me just say this. Anything is possible. That's the bottom line. I'm not here to say that there aren't things that aren't possible, because anything is possible. What we have maintained the line on is that we do not see a housing crisis coming from within the housing industry. That's the sort of the reminder that everybody has from 2008 is our business was the cause of the recession and the economic slowdown in this country, and ultimately the cause of the housing crisis. And I'm going to get into that in a second, because the next question is, why isn't this 2008 all over again? So let's pause for that for a second. I'm going to get into it in a moment. But let's break down this question. Do I think agents have the responsibility to speak truth about market volatility? Certainly they do. But let's talk about defaults. So I've got the latest delinquency reports from CoreLogic. I'll give you this in the show notes. As of the end of the first quarter, we're here in the middle of the year, 30 days or more past due. Last year, 2.8% of mortgages were 30 days or past due. March of 2024 into first quarter, 2.6, gone down slightly, 30 days. 30 to 60, 1.5 this time last year, 1.1, gone down slightly. 60 to 89, 0.4 to 0.3, gone down slightly. 90 to 120 days, maintained at 0.2. 120 days plus has gone up 0.7 to 0.9. In foreclosure, 0.3, remained even year over year. That is the look at where delinquencies are at. So if you take this look, it's certainly not true that they are going up. One category, they are going up ever so slightly, 120 days past due. So I don't see a scenario, unless you have some information that tells you something different than what I'm seeing here from CoreLogic, that defaults are up. Certainly their folks are in default. That is a fact in our business. A default, what they, obviously say in the business, maybe everybody knows this, is what you want to look at is the cure rate. And that means when somebody goes into default, are they able to catch back up on their payments? That was the big issue during COVID and the pandemic is, hey, if you put somebody on a forbearance plan, they can't make their mortgage payment, how are they ever going to, sort of dig their way out of the hole? We know the answer to that. But what we don't see are foreclosures rising. We are still not at the point that we were at in foreclosures in this country prior to COVID in 2019. Why is that? Why is this so important? And it's important. It's going to kind of lead me into the next point. But what happened back in 2000 and I think it was 10, 11, whenever Dodd-Frank came around, I don't have the exact year, which came in with that, all the reform in the mortgage business that essentially required borrowers to be well qualified. When you have a well qualified buyer, they don't default or default at a much lower rate, and that ultimately is a good thing. The other thing that I would say about a market crash, I'm going to pull up the numbers right here. These numbers are shocking on what people have in mortgages. 6 out of 10 mortgages in this country are below 4%. Think about that. 60% of mortgages are below 4%. 88% are below 6%. Those homes the people are going to fight as hard as they can to keep those. So why do I say there's no crash coming? Because you would have to have a couple of things that would happen in a crash, and we're going to talk about that and what happened in 2008. But one, borrowers are strong right now. I do not see a rise in defaults that is significant that would lead to a crash. So here's what you would have to have. If you want to make a case that I believe, and in this question, speak the truth about market volatility, what are you making your case on? And I'm not saying there's not a case to be made. You'd have to tell me what you're going to make a case on where you see a tremendous amount of defaults or you see a tremendous amount of inventory coming to market, which is going to affect prices, which is going to cause the market to crash. But I just don't see it. So we will continue on. But that was a question that came up. I think it's a good question because I think things are thrown out in the media. There are clickbait headlines that cause people to form an opinion based on something that maybe is factually correct, but hugely misleading when it comes to this subject, and the facts just don't line up there. Second question that came in, why isn't this 2008 all over again? A lot of people are saying this is 2008 all over again. I don't know who's saying that. What is different this time around? Are there other problems we should be looking at? Now, I do not believe it's 2008 all over again. Are there other problems we should be looking at? Maybe. I don't know that they're in the housing, market right now. I think there are challenges in the economy. I think there's some false positives in the economy right now, especially with employment. The most recent employment situation report, which is the unemployment report that comes out every month, had the two biggest areas of growth in our economy related to jobs are in healthcare and government. I would make the case that is a false positive. That is not, the free market at work and people creating jobs. Those are two highly, obviously the government is not that, but a highly regulated industry in healthcare. And so I do think there are things you should look at in the economy. And I do think the economy certainly is going to be a bigger factor in the next 12 months related to real estate. Now, why is it not 2008 all over again? And I got these questions in advance, so I made a couple of notes that I will walk you through in a logic pattern that I'll explain it to you from a factual basis. First of all, what happened in many people listening to this podcast, maybe were in the business in 2008. I was, and I've mentioned it several times. Back during that time, I worked for the largest holder of distressed assets in this country, helping REO agents market and deliver those distressed assets to investors and people that were buying at that time. And a lot of people obviously Did that, made a lot of money, made some really good decisions in housing and what you could buy things for post 2008. So there were three things that I wrote down. One, what caused 2008, or the beginning of it, was an enormous amount of demand. Now, you have to really kind of take a step back and say, okay, what caused the demand to spike in this country? And there is a very real reason that happened. One is there was a mandate from the federal government to increase home ownership in this country, specifically in the area they would refer to as emerging markets, which is minority home ownership. And so that was the mandate that was sort of pushing a lot of demand. Now, combine that mandate of we want to grow home ownership in this country, which, listen, everybody in the business right now is for that, right? If you're not for home ownership and you're in this business, then I've got a couple of questions for you. But everybody wants to see more people own a home, in this country. It's the American dream. And so demand's kind of coming at us. Then you have mortgage products that were sort of invented during that time. And the assumption was that you could bundle A paper mortgages with non-A, or what they would call alt-A back in the day, subprime, and bundle these securities, and you took the good mortgages with the ones that maybe weren't so good, and you would be okay. There was no default risk. And we know there was default risk. But what drove demand in 2008 was a market that was not real. It was inflated demand. If you can go out and get a mortgage, you don't have to qualify for it. You can go borrow whatever you want to borrow. And that ended poorly in 2008. So what's the first reason this isn't 2008 all over again? We're not in that market. You have to qualify for a mortgage today. Now, are some of those products creeping back in? Sure, they are. Is an adjustable rate mortgage, an issue? I don't believe it is. Can it be misused? Sure, it could. But we do not live in an environment where that is the case, right? We talked about default rates coming down because of a well-qualified borrower just a few minutes ago. So that's the first point. Demand back then was inflated. Demand today is true. Okay? Second thing, prices. So you have all this demand coming into the market in 2008. That drives prices up. There was a term back then that was coined called irrational exuberance. And what irrational exuberance was it doesn't really matter what you pay for the home, because at 5 o'clock tonight, it's going to be worth $50,000 more, right? And who cares? It was a very unhealthy price appreciation market and driven by what I'm calling inflated demand. Okay, do we have that today? Well, a couple of years ago, we did. We have to look at that and say price appreciation in residential real estate in this country over the last couple of years in 21, 22 has been unhealthy, right? So now we're coming out of that into a much more normal price appreciation market. Somewhere between 3 and 4% has been normal appreciation over the last several decades in this country. What's forecasted for this year? Between 3 and 5%. Now, so I think we have to acknowledge we've been in an unhealthy price environment. We're coming out of that, all right? The third thing that contributed to 2008 was inventory. So you have all this demand, you have a rise in prices, and then you have this economic sort of issue coming in. Fed raises rates, some arms adjust, and people end up upside down in their homes. Prices fall, and you have a surge in inventory, massive surge. Well, we're not in that situation today. Even if you go back to the default question I just answered, inventory in this country, depending on where you look, is somewhere between 2 and 4 or 5 million units undersupplied. If you took the current default numbers in this country and you said every one of them got foreclosed on, those homes would be snapped up immediately. People that are on the sidelines that say, we want in, we want to get in. There literally aren't enough homes in this country for the number of people that want to buy them. Now, volume and sales pace has slowed down enormously. That is a fact. But what's happening at the same time is you still have this undersupply, which keeps positive upward pressure on prices. So you can look at each one of those issues. You can look at demand, and you can make a case there that we're not in the demand environment that we've been in, or we were in 2008. Prices, yeah, a little bit of that over the last couple of years, but we're in a different deal right now. And what's kept prices steady is the undersupply of homes. If we were oversupplied in homes, you would see more of a downward trend in prices, but we're not there. And then you have inventory. We're undersupplied right now. So that's why I can confidently say this isn't 2008 all over again. Now, if you said there's something external to the economy and everybody's going to lose their job and all that, then okay, I'll hear your argument. I'm not saying I would agree with it. I don't know if I would or I wouldn't, but it's definitely not coming from the housing market. Everybody, you have to understand, anytime somebody hears recession, they think 2008. Because I saw a family member, I saw maybe somebody that I just cared about and loved lose their home. Maybe I did myself, whatever the case is. And we think that. Well, the truth is, in 2008, the recession didn't cause the housing crisis. The housing crisis caused the recession. And we have to be able to articulate that well. And I'm not saying just, have this approach of don't look over there. This isn't 2008 all over again. And I hear that in the tone of the question, and I'll acknowledge that. It's very different this time around. Very, very different on a number of factors. And if you're a KCM member, and I hope you are, you have the facts at your disposal to be able to have this conversation. One of the questions that I get from time to time, and I'll jump down because this is question number 6 here on my list, is how do you confidently speak about market topics and make videos about this and, record on this information? One, if it's being directed at me and I'm answering it, I have access to a phenomenal team that does this every day. We have 7 people that full-time write, research, and study the market, right? And you have that as a KCM member. You have that as sort of in your back pocket. So we have everybody that's kind of saying, okay, what's happening out there? How do we articulate it? And then I spend time saying, okay, what are we going to say? What is happening with defaults? What's happening with prices? What's happening with that? So I spend an enormous time doing that for the ability to be able to present that. And then the third piece of it, and I think this is critically important, is getting the opportunities to talk about it, right? Whether it's a podcast here or it's a webinar or maybe speaking somewhere. When you're doing it multiple times, then you start to just naturally get better at it. I mean, there is nothing in life that if you will do it over and over and over and over and over, you will get good at it. I don't care what the subject is. I don't care how bad you are at it or how good you are at it. You will improve if you continue to do it. You repeat it, and certainly I think there are people, I'm not saying I am one of them, that are very good from stage and can be very articulate, all that. But if you work on something, you're going to improve it. Now, here's the interesting thing. I was given a gift in 2020 during the pandemic when we did an enormous amount of webinars for companies and individuals, and Tom Ferry and I got on live every Friday, and we did a short deal called This Week in Housing, and many people remember that. But that, I look back on that, and that was a gift. I mean, however many hundreds of presentations I did, it was just the chance to do it over and over and over. So if you want to get confident doing it, you got to do it. We did a podcast a couple of weeks ago with Chelsea Pites, who's awesome. She does a great job with social, and she said something on there. She said, if you don't like doing video, start shooting, a video on your phone and then send it to somebody like in a DM, a friend of yours. Just get used to recording and doing it. You don't have to put it out in the world, but start doing something, right? The worst place maybe any of us can be is, hey, I want to do this, but I'm not doing anything. I'm not starting it. Start it. Start doing it. I think the other thing that I see, and I was with a group last week in Florida, and this question came up, is how do I have the confidence that what I'm talking about is right? Nobody wants to put anything out there and get sort of attacked online or, get comments that maybe somebody would say, I think differently, and trust me, it happens with KCM all the time. I would say this, there is a difference between expert advice and perfect advice. And a lot of agents get sort of caught up trying to give people perfect advice, and you can never give somebody perfect advice. The analogy that I always think of in this is if you were to go to the doctor, or maybe you had a family member that was diagnosed with something, and heaven forbid you have to go sit down with the doctor and you go through maybe a battery of tests or whatever the case is. They're going to sit down with you then and say, here's what we see, right? I'm the practicing professional. Here's what I see, which is what you can do. Here's what I see in the market. Here's what I'm now going to prescribe as treatment based on what we see. I want you to do that, and I want you to come back here in 30 days or 45 days or whatever it is. And that's what happens when we go to the doctor. Thankfully, for most of us, it's maybe with a cold or something. They give you some medicine, you get better. But let's say it's ongoing, and they say, we want to see you back in 30 or 45 days. Well, you're going to come back to the doctor in that time frame, and they're going to again go, we're going to put you through some tests. Here's what we see. Here's what we're now going to prescribe. This is going to be different. And we're going to continue on down the road with our treatment. That's our business today. Your ability to be able to say, here's what I see in the market based on facts and based on your unique situation, Mr. and Mrs. Buyer or Seller, here's what I'm going to recommend. Here's how I'm going to help you make the best decision for you and your family. And maybe if we educate people the right way, we don't have to convince them to do anything. But we are the practicing professional that gives the advice that equips them to then, sort of go on this journey of home ownership and of, being out there to achieve the dream of whatever they wanted to do. Maybe they wanted to downsize. Maybe they want to move up because they're having more kids. They want to get closer to family. What are all the reasons we know that people move? But if I'm the educator and I'm confident from it, and I can speak about it and I can shoot videos on it, that's critically important. Now, the other thing I think that I'll say that I think video is so important is what it allows me to do is it allows me to build credibility before I even show up. So if I am the agent that's on Instagram or Facebook or whatever platform you're on, and people are seeing me talk about the market, then I'm perceived is in their minds as the expert, right? And then I show up like, okay, I've seen what you've done. There's so many agents, but one that I think about a lot of times, Holly Hatch, she's in LA. She and Chris run a team. They do a phenomenal job. But she's told me, I'll go in the grocery store and people will stop me and say, I've seen your video on whatever it is on the housing market. And I think that's the effect that everybody wants to have. You want to be recognized as the expert, but to do that, you got to do it. I think you have to project confidence in that. The way that you do that is by doing it. I don't know any other way. There's probably somebody on YouTube that can sell you something that you can buy to be able to do it. I don't know how to do it. The only way I know how to do it is by doing it. And that's the bottom line there.
Most real estate agents know what's happening. Good agents understand what's happening. But great agents, they can explain what's happening. At Keeping Current Matters, we help real estate agents become experts. With market insights and marketing tools, you'll not only stand out, you'll thrive in any market. Keeping Current Matters. Be the expert.
Third question. I jumped ahead on that one. Sorry for that. I got out of order. The problem I have with the housing market is they treat it as an investment, not a place to live. This is an interesting one. I think there's, there was, I'll go back to what we talked about before, 2008. There was this feeling in 2008 that coming out of it in the years post, so think about 09, 10, 11, 12, the consensus or the theory or thought was that maybe homeownership is not the American dream. Maybe you shouldn't buy a home as an investment. And there was this question, this doubt, and maybe everybody's going to rent from now on, and should you do that? And I think that, first of all, I think that is a myth that has been blown out of the water so fast, because what we saw coming out of COVID was the exact opposite. Everybody wants to buy a home. You go through a pandemic and everybody's like, we want our place. We want our spot to be able to land and be in our own surroundings. And so I do not think that myth that was sort of given legs post housing crisis is anywhere near that. So do I think people should look at a home strictly as an investment? No, I don't. But I will tell you this, anybody that lives indoors already pays a mortgage. The question is, do they pay it for themselves or do they pay it to their landlord? That's the bottom line here. The other thing I would tell you is, regardless of your scenario, you have a housing cost. Unless you're going to live in your grandmother's basement or something like that, you're going to either pay rent, you're either going to buy a home, you're going to have a housing cost. Why not make it to yourself? Invest in yourself. I had a good friend growing up. He told me one time, he said, David, the number one thing my dad taught me was always pay yourself first. Always pay yourself first. And you think about that in retiring and saving money. When you're making a mortgage payment, you're paying yourself. Why is that? Let me give you just a couple of reasons. And this isn't all about, why financially a home should be an investment. That's not what I'm saying. But when you buy, the cost of buying, the mortgage payment stays the same. The overwhelming majority of people are on a 30-year fixed mortgage. And what do I know? Prices are going to go up. That is a fact in this country, but the payment stays the same. Two, through the amortization table, you start paying down slowly, albeit, but you start paying down that mortgage. All right, so you're starting to build equity, and you do that through paying it down and through prices going up. And you then begin to create wealth. A fact in this country is the number one wealth creator is homeownership by a long shot. So do I think everybody should look at their house as an investment? I don't know. It's the best investment the majority of people in this country have. You have to have a place to live. You can't live in an IRA or in a stock account. Why not buy and do that? I think the one thing that is certainly getting a lot of attention in some markets is the rising carrying cost of homeownership, insurance, all the things that happen. I can tell you this, appreciation and equity still kill that conversation. It still is the best decision. So there are people that, and Grant Cardone comes on and says it all the time, you shouldn't buy a home or whatever it is. He's wrong. He's wrong. Maybe somebody in his category and he's using cash for different things, I don't know. But for the overwhelming majority of Americans, buying a home is the best decision for them and their family and their finances for the long haul. That's the bottom line. No doubt about it. I think it's a good question. I think it's one that comes up that we need to be passionate about. Number 4, the American dream for homeownership seems to be fading because there are not as many affordable homes in this country. That is absolutely true. As real estate agents, how do we address this with our clients? I think you have to be informed here. I think you have to be able to articulate what exactly is happening. So let me give you a couple of things that I know for sure. I know this is an issue. The starter home category in this country has been dwindled down. Now, the good news is we did if you follow the deep dive, we do it every Monday morning at 11 Eastern. We've talked about this, and builders are starting to build smaller square footage homes. That's a good thing, right? And maybe in a lot of cases in markets, that's a townhome, it's a condo, it's something, it's attached. And so I do believe that will come back for the sheer need that we have for it. Now, the interesting thing is over the last several years, that category has been challenged for a couple of different reasons. One, people in the low mortgage rate environment could afford a lot more. And so builders started, building to meet that demand. They focused a lot of their energy on that demand. Well, what do we know is one of the biggest issues right now is affordability. So for them to be able to meet the market, they've got to create a product that is able to be afforded and open up home ownership to a new category. I do think it's harder to buy a home today, especially for young people. I do not think it's impossible. I did a deep dive just a couple of weeks ago on it, and it's a topic, truthfully, it's near and dear to my heart because I've got 3 kids that are, Gen Z, 22, 20, 17, 2 in college, 1 in high school. And they wonder, well, I'll be able to buy a home. And my message to them is, you absolutely will. You just need to be smart about it. You need to understand it, right? You need to understand the products, the programs, the mortgage tools that you have access to, the loans, the grants, the things you can get as a first-time home buyer. And then you need to save and you need to work to be able to do it because it's the best decision you can make. Now, that pretends that it's the right time in their life and they know where they're going to be. And all of those factors have to line up. But I am very, very pro home ownership, obviously, with what we do. But I am very pro in helping educate my kids on how you buy a home in this market and showing them you can do that. Certainly, if you've been in the military, the VA benefit, one of the most amazing things, and there's so many amazing benefits that veterans have. And listen, they should have them, and I'm grateful for everybody in this country that serves and has that benefit of a VA loan, because it's a tremendous asset to those men and women that serve this country. And I just think you have to educate. Now, here's the part of this question that I want to address. As real estate agents, how do we address this with our clients? Here's my question to you in that. What are you doing right now? What are you doing to educate people on how you buy a home? There are things to buy. I mean, our KCM offices here in Richmond, Virginia, and I take a look at the local market. Plenty of things you can buy. Might not be what you want. Might need some sweat equity. Might need some good old-fashioned hard work to put into it. But do it. Get in. There's so many stories we all know, if you've been in this business long enough, of people that are like, hey, I bought my first house for this. Now it's worth this. And I was able to start a business or send a kid to school or whatever the case is in the equity that they earned and built in that first home that they bought. And so I think it's all about education. Now, I'll give you a couple of things, or one specifically that I'm a big, big fan of is downpaymentresource.com. Rob Crane and the team there do a phenomenal job of aggregating all of the tools that help you buy a home. The grants, the programs, the mortgage products that speak directly to not only first-time home buyers, but those that are trying to get in the market. So I do think it's a big, big issue. I do think we need to have an education plan on it. And I think you need to be able to show people this is how you do it. And you need to educate yourself on how do you buy a home? What are a lot of people don't know, I hope everybody listening to this knows this, is that an FHA loan is 3% down. Right? And I'm not up on all loan products right now. There might even be some more advantages. But there's a big misconception. You have to put 20% down. You don't. So I think it's all about education. I think it's all about how we how we are vocal in the market about it. Because you're either going to have the answer to say, yeah, you're right, you can't buy a home, or you're going to say, this is how I'm going to help you. That's a fork in the road for sure. And I think we need to spend the time to be able to be educated and confident in what we believe about it and then articulate that in the market. Question number 5 that came in. We're going to continue on this. I'm going to wrap up here in just a minute, but I want to be able to share updates about mortgage rates, but also want to be careful that I don't cross the line into an area that I'm not an expert in. As an agent, what sources should I follow and what information should I be sharing about mortgage rates that don't cross into me sounding like a lender? I think that's a great point. I don't think anybody that is an agent needs to become an expert in the mortgage market or the secondary market or anything like that. I think you need to be educated, and I think you need to have an understanding of the volatility, certainly now that we have in the mortgage market. But a couple of things that I would do. One, you need to be a KCM member. We're going to stay on top of mortgage rates. We're going to give you what's happening. We're going to talk about the demand-based rate environment that we're in. We're going to show you the 10-year and the relationship between that and the 30-year, and ultimately give you the forecast of what's ahead. And that's what you need, right? You need to be able to say, hey, here's where I think we are. And like I'll give you a good, for instance, right now, we're in the middle of the year, and where it looks like in the next 6 to 12, 18 months, we're in a downward trending mortgage rate environment. See some good information come out. Fed maybe cuts. They said they're going to cut maybe once this year. And let's say we see some relief in mortgage rates. Well, I think most people are like, great, that sounds really good. We'll just wait till they come down. My response to that is, what do you think everybody else is going to do? What do you think they're going to do? I think when we start to see rates dip below 6.5 for sure, 5, you better be ready. We dip our toe into the 5.99, like it's going to be on. Now we're a ways away from that. I want to acknowledge that. We thought this year we'd wrap up the year dipping our toe in that. Certainly with the Fed's direction, we don't see that. Maybe we get down to 6.5, 6 3/4 by the end of the year, and forecast would say about 6 3/4 by the end of the year. So I think you need to be educated to that extent. Now, the other thing that I think is hugely important, and I cannot score this enough, is you have to have a great partner today. You have to have a partner in this business that you lock arms with, and you're able to say, Mr. and Mrs. Homebuyer, what I want you to do is go spend whatever, 30 minutes, an hour with so-and-so, my mortgage professional, and have enough confidence in their ability that you're able to say this. Whether you choose to use them or not, you will be educated and better off when you make your offer on a home. But you have to have somebody that is an extension of your team. I used to have a good friend in Dallas, Texas. His name's Jim McMahon. He's in the mortgage business, runs a company now, Benchmark. They do a phenomenal job. And Jim used to always pitch his service, or he was a partner of a team, an agent in his market, that she pitched her service as a 5-star sort of treatment. I may be butchering it, but he was one of the stars, and their title rep was one of the stars, and their inspection person was one of the stars. And the agent was like, here's what I bring to the table. So my message to you, you don't have to know everything in the mortgage market. Follow KCM. And I'll give you some others. Barry Habib's probably one of the best in the country in articulating what's happening in the market. He gets technical at times, but he's really, really good. Mortgage Market Guide is really, really good on the technical signals that are happening in the markets and how that influences things. But you don't have to do that. We're watching those every day at KCM to give you what you need, but have a great partner, right? Sometimes the lender agent partnership can be, sort of fought, and like they're just looking for deals from me and they just want me to refer. They don't care about my business. Find somebody that you can lock arms with that's really, really good. In the way you do that is look for people that are reaching out to you that are of substance. Maybe somebody who's working with a lender that is about something, that they're helping them truly grow their business. It's a great question, and I think it's one that comes up. Last one, we'll wrap up on this. I'll give you a couple of things here. The question, what is the outlook for the rest of this year? So when I'm recording this podcast, I'm getting ready to do this. I've done this presentation a couple of times on what is the forecast for the rest of the year. So I'm going to run through a few things pretty quickly to give you just a sense of where experts are saying we will wrap up the year. First of all, in transactions, we sold 4.8 million homes, total home sales last year in 2023. That's new and existing homes. This year, the average of forecasters is right at 5. So I would say right at about the same number, maybe slightly ahead of what we sold last year. Okay, so that's this market. You can go in and pull some forecasts for the next few years to see what that is, but I think we're in a market right now, and I'll read a quote here. Well, you know what? I'm going to go ahead and hop into it because it's really good. Dennis, I can't pronounce Dennis's last name. He's a professor of economics in City University of New York. He said, when it comes to the real estate forecast for the next 5 years, I am cautiously optimistic. I believe we're going to see a lot of ebb and flow, some highs, some lows, but overall, listen to this, a healthy market. Prices should continue to rise, though more slowly. Buyers might enjoy more options as inventory expands, but remember, real estate is profoundly local. What happens on the national scale can manifest differently in your backyard, and that is absolutely true. You know, there are a few trends that are happening in the luxury higher end of most markets. Inventory is growing. Inventory is growing across the country. Prices are rising, but again, slower, which is good. I talked about it as being in maybe an unhealthy market in the past couple of years, but I think he articulated that well. So about the same number of home sales this year as we saw last year. Prices, the average of forecasters right now is at 3%. I think somewhere between 3 and 5%, very healthy, very normal, very much driven by the lack of homes on the market, keeping that upward pressure on prices. We will see that in home price appreciation. So there's not this scenario where, you know, a lot of people are like, well, I'm just going to wait for prices to come down. I do not see that scenario. I see even home price expectation survey, if you look at them, next 5 years ahead, it's between 3 and 4% home price appreciation. Mortgage rates, I mentioned this, by the end of the year, the average of Fannie, MBA, NAR is 6.75% on the 30-year fix. We're right at 7 right now. So I think that's all going to be dependent upon what we see in employment, what the Fed's posture is, what geopolitical events happen, all those kinds of things are going to influence that. But maybe see a little bit of relief. I do think the Fed will cut rates one time this year, which will lead to some relief there in mortgage rates. So same number of sales. Prices certainly will appreciate. Mortgage rates should look a little bit better as we go throughout the year. You know, this was fun to do. If there are questions that are on your mind, I want to ask you to do this. If you're watching on YouTube or you can put it in the comments or on anything, you can send an email in to us at Keeping Current Matters. What are the questions that you want to hear us answer? You know, I went through, I think we have 7 here that I covered, anything from 2008 to volatility in the market to can I buy a home? I mean, at the end of the day, we want to give you the confident answers to the questions that you're getting or that you're wondering about so that you can be the knowledge broker in the market. You know, I always like to end this way, and I'll wrap up here saying, you know, there's a wall here at Keeping Current Matters that says, we believe every family should feel confident when buying and selling a home. And I think right now, there's so much noise in our business that to be the educator, to be the expert that's out in the market saying this is what's happening is what our job is. Now more than ever, we need to be doing that. And that's our goal with the How's the Market podcast. So as always, we are grateful for you for tuning in, for listening, and we'll see you back soon. Take care.